All right, everybody, welcome back for another deep dive. The market's been a little crazy lately.
Yeah, a little bit.
So we're going to dig into, what's been going on, especially with that S&P 500 Black Monday drop.
Yeah.
Dropped 2.64%, kind of wiped out a lot of the gains we'd seen. And Tesla even worse,
Oh, yeah.
15% in one day and then another 3% after hours. So we're going to get into all that.
Absolutely.
We're going to look at what Warren Buffett has to say about, how to think about these drops, and then we've even got kind of a hidden gem company that you might not know about.
Mm-hmm.
Comfort Systems USA. We'll dig into all that.
That's good.
So if you're ready to learn about how to maybe make some moves during this correction, you're in the right place.
Let's do it.
Okay, so that drop 2.64% on the S&P 500. That's got to sting for a lot of people.
Oh, yeah, absolutely. I mean, especially because it wiped out, weeks and weeks of gains that we had been seeing.
Right.
And, it's a psychological blow as much as anything. Yeah.
Because suddenly, those gains that you thought were there are gone. And then Tesla's a whole other story.
Yeah.
I mean, 15% down in one day and then another 3% after hours.
Yeah.
That's a serious drop. And, there are reasons for it, but it's definitely a cause for concern.
Well, and I mean, just to put it in perspective, that's a 53% drop from its peak?
It's a significant drop. I mean, it's not quite 53, but it's a big one.
Yeah.
And, it's a reflection of a lot of things that are happening in the market right now.
Right.
And, we've been talking about a correction for a while, and this might be it.
Right.
This might be the start of something bigger.
So why is this happening? What do you think is causing all this?
Well, there are a number of factors at play, but one of the big ones is inflation.
Oh, okay.
I mean, inflation is still high. It's come down a little bit, but it's still high. And that means the companies are facing higher costs for materials, for labor.
Yeah. And that can squeeze their profits.
Yeah, that makes sense.
And the Federal Reserve has been raising interest rates to try to combat inflation.
Right.
But that also makes it more expensive for companies to borrow money,
Yeah.
which can hinder their growth. So you've got this kind of double whammy of
Right.
higher costs and higher borrowing costs. And that's putting a lot of pressure on companies and making investors nervous.
So investors get nervous, they start selling their stocks, and that drives the prices down.
Exactly. It's a chain reaction, and it can be self-fulfilling.
Yeah.
Once people start selling, it can create a kind of a panic, and then everybody starts selling.
Right.
And that just drives the prices down further.
Okay, so how do we avoid, getting caught up in that panic? How do we stay calm?
Well, that's where I think Warren Buffett's advice comes in handy.
Right.
He's been through a lot of market downturns in his career.
Yeah, he's seen it all.
And he's always come out ahead. And his key advice is to see stocks as ownership in businesses.
Okay.
Not just as tickers on a screen.
Yeah.
If you think about it, when you buy a stock, you're buying a piece of the company.
Right.
And so you need to look at the fundamentals of that company.
Yeah.
Is it a good business? Is it well managed? Does it have a bright future?
Right.
And if the answer is yes, then, a market downturn is just a temporary blip.
Mm-hmm.
It's a chance to buy more of a good company at a lower price.
Okay, so we just need to kind of zoom out a little bit.
Exactly.
And not panic over the daily or even weekly fluctuations.
Exactly. You got to take the long view.
And
Buffett also talks about the market as being like an irrational partner. Sometimes it gets overly enthusiastic and drives prices up too high.
Yeah.
And sometimes it gets overly pessimistic and drives prices down too low.
Right.
And so your job as an investor is to not get swept up in those emotions.
Okay.
But to stay rational and to focus on the fundamentals.
I mean, yeah. And sometimes it really does feel irrational. Like you look at these prices and you're like, what is happening?
Yeah, it's like it's completely disconnected from reality.
Yeah.
But, that's the market for you.
Okay, so speaking of the market being irrational, let's talk about some of those big tech companies that have been hit hard.
Sure.
We've got Microsoft, NVIDIA, Alphabet, Amazon, Meta. I mean, these are huge names.
Yeah, those are the big five.
Yeah, and they've all taken a pretty big hit. So what's going on there?
Well, as I mentioned earlier, rising interest rates tend to impact growth companies the most
Okay.
because it makes their future earnings look less valuable in today's dollars.
Okay.
And so when interest rates go up, investors tend to discount the future earnings of growth companies more heavily. And that can lead to lower valuations. And, there are also worries about a potential recession,
Right.
which could slow down consumer spending. And
Yeah.
that would hurt these companies as well because they all rely on consumer spending to a large extent.
Yep. Right. And,
Yeah.
and each one is facing its own specific challenges too, right?
Oh, yeah, absolutely. I mean, you know, Meta, for example, is facing increased competition from TikTok.
Right.
And they're also struggling with declining ad revenue.
Uh-huh.
And then Amazon, they're facing higher costs for shipping and logistics.
Right.
And they're also dealing with a slowdown in e-commerce growth.
Okay.
So each company has its own unique set of challenges, but they're all being impacted by these broader macroeconomic trends.
Okay. And then, of course, we've got Tesla, which has been on a roller coaster ride, as we've already talked about. I mean, down 53% from its peak. What's the story with Tesla?
Well, Tesla's a very interesting case. I mean, on the one hand, you've got a company that's still growing very rapidly.
Yeah.
I mean, they're projecting, 50% annual growth for the next several years.
Yeah.
And they're expanding into new markets.
Right.
They're building new factories.
They've got new models coming out.
They've got new models coming out. They're working on self-driving technology. So there's a lot of potential there. But on the other hand, you've got a company that's facing a lot of challenges.
Right.
I mean, the competition is heating up.
Yeah.
All the other automakers are now getting into the electric vehicle game.
Right.
And Tesla's also facing some production delays.
Yeah.
And there are concerns about Elon Musk's involvement with Twitter.
Yeah. How's he going to do both?
Right. Is he spreading himself too thin?
Right.
So there's a lot of uncertainty surrounding Tesla.
Right. So it's really hard to say, is this a buying opportunity or is this...
It is. It's a tough call. I mean, I think if you're a long-term believer in Tesla
Yeah.
and you believe in Elon Musk's vision, then this could be a good time to buy.
Yeah.
But, you got to be prepared for some volatility.
Right.
It's not going to be a smooth ride.
Okay, so maybe Tesla's a gamble, but you mentioned a company that might be kind of a hidden gem during all this.
Yeah.
What's the story with Comfort Systems USA?
Yeah. Comfort Systems USA, ticker symbol FFIC. They're not a very well-known company, but they've got a very solid business.
Okay.
They're in the business of heating, ventilation, air conditioning, and building automation.
Yeah.
So they're basically making buildings comfortable.
All right, so not the sexiest business maybe, but...
Not the sexiest business, no, but it's a very essential business.
Okay.
I mean, everybody needs heating and air conditioning.
Right.
And they're also a beneficiary of the trend towards energy efficiency.
Yeah.
As buildings become more energy efficient, they need more sophisticated HVAC systems, and that's where Comfort Systems comes in.
Okay. So what do their financials look like? I mean, are they actually doing well?
Yeah, they're doing very well. I mean, they've got a history of steady growth.
Okay.
Their earnings are up about 20% year over year.
Wow.
Their price-to-earnings ratio is very attractive. It's around 15, which means that you're getting a lot of earnings for your investment.
Oh.
And they also pay a dividend. And their dividend has been growing at an average rate of 30% per year for the past 5 years.
30%? That's huge.
Yeah.
How are they doing that?
Well, they're doing it because they're in a very good position in the market.
Okay.
I mean, as I said, everybody needs heating and air conditioning.
Right.
And there's a lot of pent-up demand for these services because a lot of buildings have aging infrastructure.
Uh-huh.
So Comfort Systems is coming in and they're upgrading these systems. They're making them more energy efficient.
Right.
And they're also adding automation and controls.
Okay.
So they're really at the forefront of this industry.
So it sounds like they're really well positioned for future growth.
Yeah, I think so. I mean, they've got a lot of things going for them.
Okay.
They're in a growing market. They've got a strong track record.
Yeah.
They're well managed and they're paying a nice dividend.
So they're ticking all the boxes.
Yeah, pretty much.
Okay, so we've talked about a lot of stuff here today. We've talked about the market correction. We've talked about Warren Buffett's advice. We've talked about some specific companies. So what are the key takeaways for our listeners?
Sure. Well, I think the main takeaway is that you shouldn't panic.
Right.
You know, the market goes up, the market goes down. That's just the nature of the beast.
Yeah.
But over the long term, the market tends to go up.
Right.
And so if you can stay invested and ride out the downturns, you'll eventually come out ahead.
Yeah.
And I think the other takeaway is that, you know, it's important to do your research.
Yeah.
And to invest in companies that you understand and that you believe in.
Okay.
And, you know, if you can do that, then you'll be well positioned to weather any storm.
All right. Well, that's some great advice. And yeah, and just to reiterate,
Yeah.
you know, Warren Buffett's advice about seeing stocks as pieces of businesses,
Yes.
not just as tickers on a screen.
Yes.
I think that's really, really important.
Absolutely.
You know, because it helps you stay focused on the fundamentals and not get caught up in all the noise.
Exactly.
Okay. So as we wrap up here, is there anything else that our listeners should be thinking about?
Well, I think one question to ask yourself is what signals will you be watching to decide when it's time to buy back in?
Okay.
You know, are you going to be looking at interest rates? Are you going to be looking at inflation? Are you going to be looking at company earnings?
Right.
What are the signals that will tell you that the market has bottomed?
Yeah.
And it's time to start buying again.
Okay. And maybe another thing to think about is, are there any specific industries or trends that our listeners think are going to do well, even in this kind of environment?
Yeah, that's a good question, too.
Yeah.
You know, are there certain sectors that are going to be more resilient
Yeah.
to a downturn?
Okay. Great questions to think about.
Yeah.
All right. Well, that's all the time we have for today's deep dive. We hope you found it helpful and informative.
We did, too.
And as always, we encourage you to check out the show notes for links and resources mentioned in today's episode. And until next time, happy investing.
Happy investing.
All right, we'll talk to you later.
See you next time. Bye.